All right, you're looking at a monthly chart of the Nasdaq, and I just wanted to point out, I wanted to pull back for a little bit and zoom out, take a step back, as Phil Lesh would say, and we have our nice little 3-year bear market, which was the .com bust, coupled with the 9/11 tragedy. Then we had a nice little run, and this is our financial crisis, right? So we've had two, pretty major bear markets. And now the third one here recently was the Jerome Powell induced interest rate hike, 37% peak to trough, garden variety bear market, which is fine. It made a bottom, retested. Had a nice little rally this year. In the last 2 months, we've been down a little bit, which makes everybody, predict doom and gloom. And I don't predict anything. I just try to interpret the data. And, I would say this is a pretty significant bear market that we went into. And if we're going to pull out of it, I mean, eventually over time, the indexes go higher. So, I just wanted to point that out. The bear market was this right here, 16,212 down to 10,088. Like I said, 37%, made a bottom, retested, had this run up. And I know when a market's going sideways, people have their narratives. The bulls want to point out that this looks like a cup with handle pattern, and which is fine. And then the bears will, more short term look at the market, the daily here, this head and shoulders pattern, which led to a nice downtrend the last couple of months here. And we got our Gumby shoulder this week, mostly, on this pullback. So it's definitely a good month, 2 months for the bears, and that's fine. I just wanted to point out here on the daily that on the way down, we had these inverted hammer candles. Then we had a pink rally day, a reversal from 13,161. We went to 14,169. Nice little, I guess you can call it a bear market rally, but this was an 18% run from the May 10th breakout up to here 14,446. We had a 50% retracement, which is a 9% pullback, and then it rallied up. Now it's pulled back nearly the old, it's 50 points above this. So it could be a retest. It could totally take that out. We'll just have to wait and see. Take one day at a time. Like I said, I'm not predicting anything. We'll just take things one day at a time. Sure, the market's weak. There's a lot of weak stocks. 80% of the stocks follow the Nasdaq. Growth stocks especially are getting hit hard. So I'm going to move on to stocks. That's it for the Nasdaq. I could do a comparison of the other indexes, but the Nasdaq and the Russell are doing the worst. And I did want to point out these. Since I pointed out the inverted hammer candles before, we have 3 of them here in a row where they just close at the low of their daily range. Essentially, that's what it was. And on Friday, it looked like we had a short cover rally here going into the weekend. So this is Wednesday where it closed. The low was 467. The close at 69, 2 points off the low. Thursday, 22 is a low, close at 23, 1 point off the low. So these are closing at the dead lows, which usually leads to lower prices. Yesterday, Friday, the low was 200, closed at 211, so 11 points off the low. But what we're looking for is one of these, a pink rally or a reversal candle. And so that's what I'm looking for in the index, and just take it one day at a time. If it continues to go lower, we can't control the markets, but we control our exposure to the markets. And so you just manage that exposure that you do have. I don't sell out of the market. I still hold Novo Nordisk and CrowdStrike, but I did sell a lot of my stocks last week, like Celsius and what was the other one? ELF and Amazon. So my system just forced me out of the stocks, and that's okay. I could take small losses. Actually, ELF was a huge gain. But anyway, it doesn't matter what I do. I just want to go through some stocks and just show you, what's performing. The Magnificent Seven, they're going to drive the index because of their large size or market cap. And anyway, this thing has shown weakness. It's consolidating in a base. I mean, yeah, right now it's at 174, and 3 months from now, I mean, we have 14 weeks left in this year. And by the end of the year, this might look like a good price. I mean, it might look like a bad price too, if it shows continued weakness. But like I said, I'm not predicting anything. It's just trading below the 50s. So anything below the 50s, hands off. And a lot of these are Microsoft, consolidating in a base as well, but sliced its 50. Took forever to rally back up to it. Then, gosh, it's been down, what, 6 days in a row, 7 days. So anyway, Microsoft not looking too good. Amazon, I mentioned these short bases here. There's a lot of stocks with these short little bases that failed last week. I showed a ton of them last week, and during the week we were watching them. Uber, and there's just a lot of them. Cadence, Synopsys, just a lot of stocks just failed last week because of these short little bases. They might need more time. They might form double bottoms now that they've undercut their recent lows. So that's fine if it comes down to 120 and then builds the right side of a base back up to 140. I mean, you just got to give it some time, let it play out. Don't try to predict anything, and don't try to be a hero and try to buy at the low, because they can continue to go lower. One thing about it, an index and a stock going lower, we never know how low it's going to go or how long it's going to last. And NVDA is another one that just gave it up last week, sliced its 50 and continued to the downside. Last week it was down 5.2% last week. So just a lot of weakness here with these mega cap tech stocks. Tesla did the same thing, sliced its 50 here, and was set up in this base. Like I'm talking about, these bases are pretty short here. This is 10 weeks, which is longer than most of them, which were like 5, 6, 7 weeks. But this one sliced its 50, and that I keep my eye on it, but it doesn't look good. Meta is one that looks a little better. This one has similar to Tesla, except that Meta is above its 50, or right at its 50. I believe it's at its 50. Don't speak out of turn, jargon. 1% below the 50, so it did undercut the 50 there. Okay, well, once again, short base here, maybe need more time, but it's holding up better than most, as you can see, which is not saying much. Low bar. Google is the best of this bunch, the Magnificent Seven, and it closed, come on, is it below the 52? Yeah, just a tick below the 50. So man, this is really all of these stocks are below their 50 now, so not looking good. I'm going to move on. I'm going to take you down a negative road and then bring you back on the positive track. Some of the retail, the consumer is allegedly slowing down, and stocks since a slowdown, they make the move before the actual happening, and then they go higher before they start improving too. So the market reads into that. This is Target, huge retailer, 52 billion market cap, making new lows on Friday. That management's had a heck of a time with shrinkage and just managing their inventory. Foot Locker, this has been a disaster. 2 serious breakdowns after earnings reports, just terrible. CHWY, it's another retailer, making new lows last week, just on a slice to 50. This is why I sell stocks when they slice their 50 way up here, like $42 or something. Now it's at 18, so that's a reason for the rule. So no, I'm just going to go through. I can go through a ton of these, and it's just kind of the same things. Just trading below moving averages, showing weakness. Snow had an inside day on Friday to give the bulls hope, only to be crushed next week. No, I shouldn't say that. I'm not predicting anything. Snow could go to new highs. DigitalOcean, another one, just, and this one had weak earnings, so it deserved this haircut, but it's just continuing to make new lows and showing weakness. HashiCorp, another software stock, just making new lows. Palantir, this is a popular stock on Twitter that people like, and it's got a large market cap. We had it on our short list last week because it sliced its 50, and then it had a vertical violation here where it came straight down, and then took like a month or 5 weeks to rally back up to the 50, and just got pushed back down. So that was a short play. Another one is Deckers, is when we had on a short for MC stock charts. It just sliced its 50. It takes forever to rally back up and just crashes and burns. And we'll see if it can hold that 510.22. It closed just 50 cents above it, or not even that, 30 cents above it. So we'll see if it can hold above that support there at 510.22. We'll see if it makes new lows. What was the other one that I was looking at? Oh, Uber. Yeah, this is another one with these short bases. Can't make any traction. It just failed, right? It still has not undercut the 52.95. So we'll look for that for support there for Uber as it's consolidating in this flat base. But like it says there, 38 days or 8 weeks, that's just not enough. Apparently, especially in September when the seasonality is just killing a lot of these stocks. Anyway, I told you I would go to the positive track, and I'm not going to comment on these. I'm just showing relative strength, in a weak tape. This is a Fabrinet, and this is in that group with Sanmina and Plexus and Flex, and this thing's starting to pinch in a little bit after the gap higher. So that one is showing strength. Abercrombie and Fitch, another one, retailer, right? Showing relative strength from the breakout from an earnings gap higher. So that looks pretty good as well, holding up above moving averages. We like that. ESTC. Now this one went up on the news of Splunk being bought out. It was a funny reaction on the software names because some of them sold off, and then others like ESTC had a nice move after Cisco Systems announced that they were buying Splunk, and that one had a nice move, in a pretty weak tape last week. So ESTC is that stock. Dorian LPG. This is a oil and gas transportation pipeline stock. This is a pretty strong group. Quite a few stocks doing well here, and this one's formed like a cup with a handle, broke out on Friday, so we'll see how that one performs. That one definitely looks strong. FTI, oil and gas equipment, those stocks have been pretty strong too. Pull back to the 21, found support and bounced. CRS, a steel stock, man, this has had a nice trend here. Base on base pattern, little handle here and a breakout, and it came back to the 51 time, just moving higher. So CRS looks good. DELL is parting like it's 1999. Had this gap up on earnings and pull back a little bit. Once again, pinching in, showing this flag type pattern. If you go from the low of the breakout and then pinching in here kind of nicely. So we'll look for tight trading in DELL. BRBR, I'd be lying if I told you I know what these guys do. It says cosmetics, personal care, protein drinks. This one's doing pretty well too, which reminds me of Shark Ninja. The IPO is, it undercut its IPO price and then has been rallying ever since. So I posted a chart of Shark Ninja on Twitter, and a lot of people say, hey, they have good products, but I've never tried them, so I'll take your word for it. KNSL, another stock showing strength. This is insurance. Of course, the insurance have been strong with the higher rates, and there's a lot of them. I'm just going to show you this one. I believe I might have another one. I don't know, but that whole group is doing pretty well. CEG, this alternative energy play, and this one, it was a spinoff from Exelon, I believe, but you could see IPO went right to this is, I guess, your due diligence phase, and it went straight to the institutional support there. There's a cup with handle breakout for Constellation. These IPOs with the motherships, that are spinoff, have a lot better footing, more stable than some of these other ones that are coming out and just crashing and burning like Kava. Another one that I want to show you. Come on, Marty, which one was it? AGCL, stock I never heard of. I don't even know what they do. Anyway, if Market Smith's going to do this again, I'm going to have to cancel this video. Anyway, trust me, that one is doing good. Apollo is doing well. You can see the cup with the handle here, pull back in the breakout. That one's showing strength in a weak tape. They just bought a natural gas company in August, and definitely the market liked that deal. This is Kamiko, CCJ is the ticker symbol, and kind of a uranium play, right? And uranium's been strong as well, but you can see the cup with handle breakout and just trending higher. I like trends. I'm a trend trader, so I'm attracted to stocks like this. This is an energy coal stock, AMR, had a long consolidation. This is a weekly review, so I should show the weekly charts. You can see the long consolidation period, and it's shown the ability in the past, to consolidate and then move up, consolidate, then move up. So it's shown the ability to really move, consolidate and move up, consolidate. Now it's just starting its move. So I wouldn't say that it's really chasing here. It is pretty far away from its base, but a pullback to the 10 might be all that you get here. And it could be on the start of a long run. Could be on the start of a long run. CEIX is another one in the group. Once again, it's a weekly review, so I show the weekly chart. This one had a nice cup with handles. You could see the 37% depth in the base, pulled back in the handle, and now has run higher. So the energy coal stocks are looking good. And I believe that's it for this week. Anyway, thank you for watching, although I lied because in honor of Steve Jobs. One more thing. It's going to get better in a little while, to quote Eric Clapton here. Novo Nordisk is a stock that it's a diabetes play, but I know that the weight loss is getting all the attention in the news, but there's expected to be way more people with diabetes here in the future, not too distant future, and their bailiwick is the diabetes. It's a diabetes stock, and just this media is covering the weight loss because it's a new fad or whatever, and a lot of people are using it, and it's definitely driving earnings and sales. But you can see how this one moves. It consolidates and then moves higher, consolidates and moves higher, and here's the last consolidation, moved higher. Now had this consolidation, moved higher, and now we're in a consolidation period where if you look on the daily, it's just forming what our friend Mike Webster would call a shelf-like pattern between 90 and 100. So doing nothing wrong, actually showing really good strength in a week tape. Shelf pattern showing strength in a week tape, doing nothing wrong. Oh yeah, they split their stock 2-for-1 last week. People say, oh, why do they split their stock? Well, some companies do it for liquidity. Some people do it just to lower the price, they make it more affordable. Others do it because they're pretty confident in their business going forward, and they think they're going to continue to crush earnings. And I think all three apply to Novo Nordisk. I did want to just show one more thing here with ELF. This is a stock I had to sell last week. Had it for a long time. I believe since like the $50 area, but it had this nice long run on this upper channel, and it broke the upper channel here, as you can see, at 137, then pulled back in. So I thought, okay, it's going to be fine. But now it's just crashed and burned and below its lower channel here. So I believe it just probably will form a base here. When it sliced to 50 and broke the lower channel simultaneously, I had to sell that. But anyway, it had a nice run. I don't buy a bottom or sell a top. I just ride the trend. And so this one I had to say goodbye to, but it was a nice stock for a long time. And if it does just form a base and continues to deliver triple-digit sales and earnings growth, I mean, it could just do something along the bottom here and just kind of trickle along the bottom. Although I must point out one thing here: if you're still holding out with ELF and thinking that it's going to just rally back through its 50, it does have a gap in the chart here about $86. So I would be worried about that. It coincides with its 200 as well. So a pullback to the 200 wouldn't be the end of the world, but right there, it's got a high of, 86.71. So if a pullback to 86.71 filled that gap, that wouldn't be the end of the world either. It's not that far away. And since it went from 139 to 100, a little move to 86 would be beneficial, I think, longer term. Anyway, that's it for me today. Thank you for watching. At MC Stock Charts, we do one thing: we never give up.